Welcome to the video, and today we're going to be talking about Arrived. And if you don't know Arrived, it's a company that I've covered before that, much like the greatest things I love on this channel, it's fractional investments in property. This one specifically, Jeff Bezos backed in the United States. So it allows you to invest in properties from as little as $50, and that's quite cool. And it could be short-term, things like Airbnb, or long-term in terms of family homes. And as always, I don't like to just create one video on these sorts of platforms. I like to see the journey. Most of them are coming out new when I do cover them, because I like to try and catch them at the beginning, and so then I like to cover how they evolve and the different things that come out within their roadmap and stuff like that. And they have just had a major release, which I think is really quite interesting to all of us, especially as investors, and that is the Arrived Single Family Residential Fund. You think, well, what is that? What does that mean? What does that mean to me? Traditionally, through Arrived, you would invest in a single property, much like you do on the other platforms that I've covered. You pick a particular property and then just choose the investment amount you want to invest within that particular property. And that is what most platforms do. But the fund is actually very clever, because instead of investing in a single property, you invest in a fund of properties. And if you think about a fund, it's the same as any sort of investment fund. It's a group of things put together, and you invest in that group. You could invest in any sort of investment fund, which would be investing in lots of different companies as a bunch, and then you just buy a share of that fund. Or in this case, it's a bunch of properties that are all single family residential homes, and you invest an amount into that as a whole. And you think, what's the difference, Ross? Why would I do that over investing in a single property? But there are differences, and they can make a real difference to you as an investor as well. And I think one of the biggest benefits to you as an investor is the instant diversification. Like, we always talk about diversification, and if you haven't seen any other videos on my channel, that's kind of why I invest in real estate through these things, but I also do stocks and lots of other things, because it's diversification. It's key. It's like managing that risk, because we just, that's what you're supposed to do as an investor. You manage your risk. And when you're investing in a single property, if you put all of your money into a single property, the risk is then not spread. Makes sense? But if they have a fund of properties, it is spread across all of those. So you might have one that doesn't perform as well as expected, but you then may have many that perform better than expected. So you get the benefit as an investor of that straight away, without having to pick the right stock, or in this case, the right property. It's the same reason we invest in ETFs as a solid thing to do, because it is the least risky thing to do. And it is, over time, the best wealth generator, because we don't have to pick that one single mass stock that's going to do 500% in the next 10 years. Like, we just don't need to do that. We can just invest in a fund that will incrementally get more every year, and that's easier and more beneficial. You think, well, yeah, I would prefer one that just does 500% in 10 years. But the chance of finding that are really slim. Like, it's like a 1 in a million. So if you want to take that risk and risk it not performing in that way, fine. And this is why funds in general are more beneficial. It gives that diversity, and it just makes things better to you as the investor. So I think this is a really, really nice way of pooling together, or providing a feature with the fractional investment in properties. And I think this is one of the only platforms that has released this so far, which I think is pretty cool. And it's open to all. So it's open to accredited or non-accredited investors, which means anyone. It doesn't have to be a certain threshold. But talking about thresholds, you have a higher maximum investment as well, because it's a fund across multiple properties. You can invest way more money into them as well. You're not limited by, obviously, the price of one house, because obviously you could just buy the entire house if it's just one. But as a pool of properties, you can invest much, much higher amounts within this fund. Bonus as well, you don't have to wait for a property to become available as well, because it's a fund. You can invest anytime, so you're not having to wait for a particular property to come on the market or be live or in a particular area, whatever. You can invest anytime from as little as $100 into this fund. That's the minimum amount you can invest in this fund, but from $100 you can invest anytime you want, which is, again, makes it more accessible to you. So you can have an investment schedule that you do every day, every month, whatever you want to do as your investment schedule, you can do within this fund, which is way better than waiting for a particular property or trying to find one in the first place. Also, as an investor, one of the things that I obviously hear a lot is about liquidity. People want access to their money should they need it. We never know. I always say, and I'll bang on about this about a million times, but you should only invest money that you are prepared to invest, and you shouldn't need that money. However, things happen, and sometimes you need that liquidity back, so you need to liquidate your investment, sell your investment earlier than you plan to. And so with this, because you're not relying on a single home, there is such a higher amount of increased liquidity, and they allowed you to, I think, have it every 6 months. So every 6 months you're able to liquidate. So in the same as the exit windows on things like Smart Crowd and Stake, they have their own liquidity times where you can sell your portions of the fund every 6 months. And it's not the same as a REIT, and I'm going to do a video because I've been asked a couple of times what's the difference between these things and funds like this and REITs, and there is a big difference, and the biggest being the fact it's not publicly traded. Obviously, it's traded through this, but not on the stock market, and there are a number of different differences, but I'll make a video on that because I think there are some key points of that. However, with this, you have the exit windows every 6 months. So that is how this will work for you. So you have increased liquidity, so it means you are not tied into that property until someone sells, for example. And another really key benefit as well is the operational costs are lower because they're spread. You know, instead of it being a single home, it's multiple homes, but those operational costs are spread across the entire fund. So that means that the costs for you to invest operationally, you know, there are costs on everything. Every one of these platforms, they have to run this. They have to do all of the things to make, not just find the investment, run the investment, manage it, all of that sort of stuff has to be done, and that's a cost to them as a company. But that is spread, so you get a lower operational cost. So that means, again, lower cost, better. More money for us investors. We like, very good. And I think just the diversification alone, this is something that I would actually love to see other companies, platforms that do fractional real estate. I'd love to see them do more of this because it's such a great thing. It means that we are not, as investors, trying to pick a particular property. We just don't care. We're investing in property, basically. We're just saying that's it. That's all we care about. That's what we want as an investor. We don't want to have to do the heavy lifting. We don't want to have to work these things out, pick the right property. So I'd love to see more of the platforms that I cover doing things like this. I think this is going to be something that's incredibly valuable to investors. I think this is something that we will see more of in the future. I hope we do. I'm not sure whether there are certain regulations that stop people doing this, but you know, these guys, they're all SEC approved. So the SEC, this is an SEC approved fund. This is why they can only open liquidity every 6 months, because there are certain rules they have to comply with the SEC being registered in that way. And because these are American based and arrived, they have obviously different rules to other financial regulations around the world. So there might be reasons why they have been able to do this, but others are yet to follow. But it'll be super interesting to see how these guys develop with these funds, if they open more funds, if they open short-term rental funds, etc., 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 and see how the funds of fractional investments start to develop. I mean, if you're interested in this, check out realtalk.business/arrived. You can always hop on my Discord as well, realtalk.business/discord. Let me know if you have found any other companies that are doing funds like this. Again, I'd love to hear about them because I do think they're super interesting for me as an investor and for other people that are watching these videos as well. Don't forget, if you enjoyed this, drop me a like, share the video with anyone who you think would benefit from it. Otherwise, I will see you on the next one. Peace.